What a joke of a dip on Thursday.
Snap right back to close the week nicely.
Honestly, was kind of surprised, but nothing should be surprising in this monkey market.
Yup, this week we are bringing you stock analysis for SoFi, who just went public.
An AI leader in China, Baidu.
And in case you haven't done so already, hit that like and subscribe so you don't miss out on more video like this.
S&P 500 pinned another all-time high this week. Will the market ever get a real pullback?
Maybe in September, October? Well, like we mentioned last week, we are expecting some red into this week, and we protected our position with some hedging positions.
And what is new? The market instantly snapped back and both the S&P 500 and Nasdaq made another weekly high.
Dow Jones still pending for a breakout, so this should be able to carry the overall market higher if bull break the current resistance level.
Looking at the S&P chart, if the stock pull back, the first support is around 4,300 and likely to test 4,260 if it doesn't hold.
Nasdaq closed the gap at 14,570, and this will act as the first support next week.
US dollar is consolidating for a breakout from the upper trend line. We should see the price hit $96 after the breakout.
Real quick on the crude oil, it's currently testing the 2018 high right now at Friday close of $74.67. Oil prices has been rising steadily for months now.
I noticed the average gas prices have climbed to 7-year high.
What are they really doing right now is that OPEC has taken a very gradual approach to put barrels back on the market, with the intention to keep the prices high, increasing revenues for oil production countries.
I also heard that the US producers have also been pumping less than expected as they focus instead on making money for the investors.
Well, welcome to the manipulated market.
Just a fun fact on the side, the world will run out of oil in 2030 and other fossil fuels in 2050.
Interesting. So, since the beginning of last year, about 593 SPAC have been listed, and one of my favorite is SoFi. And I believe this might be a good fintech stock to pick up right now.
SoFi merged with IPOE on June 1st, trading at a 14.4 billion valuation. If I remember correctly, SoFi has been around since around early 2011.
That's right. SoFi was founded in 2011 as a platform for student loans. And the company now has added a suite of financial products and services from auto loans to mortgages to credit cards.
They are trying to be the first complete one-stop shop for all things digital banking through its app. You can borrow, save, spend, and I think invest on the SoFi platform as well. Many believe this company has the potential to turn into the Amazon of finance.
I think the traditional banking nowadays also offer those type of services. I can save, apply for loans, offer different credit cards, and I can even invest with Chase now. What makes SoFi different?
Do you know that a lot of property related fees that banks incur, we, the consumers, end up paying it? And even worse, student loans involve so many middlemen, each with their own fees they want to collect. I just like how SoFi gives you more transparency when it comes to borrowing and typically offers a much lower loan rate.
Actually, I was looking into that recently. The typical borrower refinancing a student loan would save about 14,000 under the SoFi model. Fixed rates start around at 3.5% and variable rates start at as low as 1.9%. To be honest, this is way lower than my college loan that I took out for a 6% interest rate back in 2016.
Wow, don't underestimate a little number. A couple of percentage points could mean a lot of money.
I really like how SoFi offered the lending rate within a couple of minutes on its website, and we still have to go to the branch to fill out an application in order to get a quote delivered with those traditional banking.
This might be one of the reasons why the younger consumers might favor SoFi.
Another aspect of this company that I like is their acquisitions. In April 2020, SoFi acquired Galileo for $1.2 billion. Galileo is a banking infrastructure solution company that offers a payment processing platform and a variety of services and products for digital banking companies.
Like the AWS cloud service for tech companies, Galileo provides the infrastructure for fintech companies.
This should continue to play a major role in the future of fintech because these small challengers banks benefit from lower customer acquisition costs, and Galileo provides them with almost everything they need. Well played by SoFi on this one, I think.
Yeah, good acquisition. Not to mention, this March, SoFi is also in the process to acquire Golden Pacific Bancorp to seize more national bank charters. This should help with the profitability of the company as borrowing costs would be much lower.
Well, right now is still a pending process for the acquisition, but the results should move the stock prices in either directions. We should expect the results sometime later in this year.
Also, the lockup period just ended on June 28th, which means some of the early birds might have taken profits. So we probably won't see much turbulence until August 8th, and that is the employee trading restriction expiration date.
Aside from the expansion of the company, two catalysts we should be on the lookout for are the federal student loan forbearance period should end on October 1st this year, and second is the potential interest rate increase into the next couple of years.
Yeah, absolutely. Consensus among analysts on the street expect the price to be around $27.5, which implies approximately 50% upside potential from the current price.
So is now a good price to get in, you think?
I would wait for the price to test 14.5 to 15. This is a good support area to initiate a position.
Nice. Also, SoFi is one of the Reddit's most mentioned stocks. We might see some surprises into next couple of trading months. Let's talk about something pretty controversial lately.
Sounds like it's Chinese related.
Yep, Baidu has been around for a long time and has shifted gears a few years ago to AI in China.
So, according to Kathy, AI is going to be a 30 trillion industry in 15 to 20 years.
Oh, Kathy, I haven't heard that name in a long time. Let's not talk about how unrealistic she can get, but she does have a point.
I think so too. AI can have so many applications that can potentially improve humanity, and we are barely scratching the surface.
Could be kinda scary though. What if Skynet happens?
Well, then, I don't know.
Well, back to today's topic though. Baidu was just as famous as Baba and Tencent. What happened?
Yikes. Yeah, Baidu hasn't been doing too hot since 2018 and even got a bad rap for not adapting.
But actually, they didn't sit around and do nothing. And they actually invest deeply in their AI area under the radar.
So we know that they're doing AI now, but for those of you who don't know, Baidu actually started out as a search engine which established their leading position in China. But their downfall started after they moved into mobile networking, and they haven't been expanding in that area a lot either.
Right. Currently, most of their revenue still come from search engine ads and iQIYI.
Their ad revenue growth has been slowing down, even negative growth in 2019 and 2020.
So if we consider Baidu as an ad-based revenue base, it is definitely not a good one.
Yeah, for real, with no future basically. But it is currently transforming itself into an AI company, and if it can successfully do so, I think it has great potential.
Yeah, it could be like WeChat to Tencent and Taobao to Alibaba.
That would be exciting. So, let's talk about Baidu's AI.
So what AI does essentially is predicting using the data in your possessions, so stuff like playing chess or loan approvals.
And with the cost of AI continue to decrease, it could be applied to areas that we couldn't imagine, such as driving, medicine, and human resources.
So by that logic, we can apply that to even more areas then, since we are already in the world of using existing data to fill in the blanks in the future, right?
Exactly. It can cover a lot of grounds. So a good AI system requires a huge amount of data with a lot of time for the computer to learn and improve.
So that means having a lot of capital doesn't guarantee a great AI system. So being an early bird is critical for AI companies' success.
Yup. The earlier you start, the more data and time you have on your competitors.
Even when Baidu started early, there's still a lot of tough challenges in the AI space.
Yeah, so the first one is that early capital investment is huge and long period of R&D.
which means company have to have a lot of money already or to have keep financing from the market, and a lot of them can't last this long. Look at Google, they sold a lot of their AI subsidiary.
Right. And next challenge is the commercializing of AI.
Yup, look at AlphaGo's inventor, DeepMind. Their mine is deep, but their losses every year's deeper.
Yeah, they keep failing at commercializing their tech.
These two challenges are the biggest bottlenecks for AI, so whoever can overcome these will grab the big piece of cake.
Now that we have some understanding of AI, let's circle back to Baidu.
In China, Baidu is unanimous leader in AI.
From the application to the back end, Baidu is ahead of everyone else.
Yup, this includes their AI engine platform, Baidu Brain.
Baidu's Paddle, which is their open source deep learning platform.
And an AI-specific accelerator chips, Kunlun, it matches the power efficiency of NVIDIA's T4 card.
Wow, NVIDIA, huh? Also, don't forget its intelligent personal assistant, Doer, which was launched in 2015.
So I guess the question is still the same. Can Baidu overcome these challenges we mentioned here?
Let's start with their commercialization. According to CEO Robin Li, their revenue will surpass ads and become the biggest contributor.
There are two areas for AI commercialization, AI Cloud and Apollo.
So currently, Alibaba and Tencent has 70% of cloud market share in China, and Baidu only has 8%.
Looks like Baidu doesn't stand a chance in cloud, but China's cloud market is mainly IaaS, and Baidu is mainly PaaS, which it has 39% of the market shares.
PaaS is basically providing a platform for other companies to build their model on. And according to IDC, PaaS will overtake IaaS as China's main cloud business model with 48% year-over-year growth in 2025.
So Baidu's leading position in PaaS will give them tremendous potential for growth.
Exactly. Tencent and Baba are both not bad in PaaS, so they will continue to be Baidu's biggest competitions.
Next area is Apollo's, which is Baidu's driverless operating platform.
Baidu is the leader in China for autonomous driving. Its L4 autonomous driving has completed over 10 million kilometers of road testing without any reported accidents.
According to California, Baidu's autonomous driving is better than any other brands on the market.
And according to third-party institution Navigant Research, Baidu is in the same tier with Google's Waymo, GM's Cruise, and Ford's autonomous vehicles.
So unlike AI Cloud, Baidu doesn't really have any competitor in China for autonomous driving.
And on top of that, unlike other autonomous driving companies, Baidu has already commercialized that by launching paid robotaxi in multiple cities in China.
And according to the CEO, robotaxi will be commercialized everywhere in China.
Besides robotaxis, Baidu has already started selling their Apollo self-driving system and aim to have Apollo software on over 1 million cars within 3 to 5 years.
That's great. Selling softwares means higher margins and easy to scale.
Baidu is also building their own EVs with Geely, a Chinese automaker.
I don't like this move by Baidu.
Well, why not?
Because Baidu already doesn't have as much capital as Baba and Tencent, and they are using it to invest in EV making space, which is highly competitive with slim margins.
Oh, I see. They should be investing in high-margin autonomous driving software.
That would be one reservation I have with Baidu. Other than that, I like the AI cloud and love the commercialization of autonomous driving.
Yeah, me too. And since self-driving is still very new and even with paid robotaxis running, it's just hard to give a fair evaluation for Baidu without a consistent profit model right now.
So we recommend after this video, if you like and want to invest in Baidu, invest using a small position and bet on Baidu to cash in on its potential.
Because if it does, then this stock can easily 10x or even 20x.
And if it fails, at least since we are using a small position, we won't assume too much risk. Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.